The document I'm about to describe was never supposed to leave the Department of Energy. It was classified at a level that doesn't officially exist. And 3 weeks ago, someone I've known for 22 years handed me a photograph of page 14. What I saw on that page made me cancel a family vacation, pull $60,000 from my brokerage account, and drive 11 hours to a coin dealer in a state I'd never visited. I'm not a conspiracy theorist. I'm a retired procurement analyst who spent 31 years evaluating supply chains for defense contractors. I know how to read a government document. I know what classification markings mean, and I know when something has been scrubbed from public view because it would cause panic. This is that something. The document is dated September 2024. The title, and I'm paraphrasing slightly to protect my source, references Strategic Material Reclassification Protocol 7. The subject line contains 2 words that should terrify every person watching this. Silver, seizure. Now, before you click away thinking this is another precious metals pump, let me be absolutely clear about what I'm not saying. I'm not saying the government is coming for your coins tomorrow. I'm not saying silver is going to $10,000. I'm not selling you anything. What I'm saying, what that document confirms, is that the United States government has formally reclassified silver from a precious metal to a strategic material. And buried in the appendix is a legal framework for emergency acquisition that mirrors almost exactly what happened in 1933. But here's the detail that made my hands shake. The timeline isn't years, it's months, and the trigger event they're preparing for has already begun. This is the story of how silver went from being a shiny coin in your safe to a matter of national security. This is the story of who's really buying, what they know, and why the price you see on your screen is about to become irrelevant. The banks want you to sell. The government wants you to wait. The physics of the next decade says neither option will be available much longer. Let me show you what I mean. To understand why silver is being reclassified, you need to understand what changed in the last 18 months, not in the markets, in the laboratories. For a century, silver was a monetary metal that happened to have industrial uses. It went into film, into mirrors, into electrical contacts. Important, but replaceable. If silver got too expensive, manufacturers could substitute copper or aluminum. The demand was elastic. The price had a natural ceiling. That ceiling just collapsed. 3 technologies, all reaching commercial scale simultaneously, have fundamentally altered silver's position in the global economy. And what makes this different from every previous silver bull case is that none of these technologies have a substitute. The chemistry won't allow it. The first technology is photovoltaics, solar panels. This is confirmed, not theory. The Silver Institute's own data shows solar demand has increased 400% since 2015. Last year alone, the solar industry consumed over 160 million ounces. This year's projections exceed 200 million. But here's what the projections don't include: the efficiency breakthrough. In March of this year, this is confirmed, published in Nature Energy, researchers at a laboratory I'm not going to name achieved a 47.1% conversion efficiency using a silver-based heterojunction cell. The previous record was 39%. That 8-point jump represents more efficiency gain than the industry saw in the entire previous decade. Why does this matter? Because higher efficiency means solar becomes economically viable in places where it wasn't before. Northern climates, cloudy regions, industrial applications that couldn't justify the footprint. The addressable market just tripled, and these new high-efficiency cells use more silver per watt, not less. The silver loading on next-generation panels is running 40 to 60% higher than current technology. This is the demand curve the government is looking at. Not a gradual increase, a step function, a hockey stick that makes their supply models worthless. But solar is just the beginning. The second technology is the one that made me drive 11 hours. Solid-state batteries. Now, I need to be careful here because some of this is confirmed and some of it is still being verified. What I can tell you with certainty is that multiple battery manufacturers, and I'm talking about the giants, the companies that supply Tesla and BMW and Toyota, have filed patents in the last 18 months that reference silver as a core component. Not silver for contacts, not silver for wiring, silver as part of the anode. The theory, and this is theory, not confirmed, is that silver's unique atomic properties solve a problem that has plagued battery technology for decades, a problem called dendrite formation. I'm going to simplify this, but essentially when you charge a lithium battery too fast, crystals form inside it. These crystals grow like little needles. Eventually they puncture the internal membrane. When that happens, the battery shorts. Sometimes it catches fire. This is why your electric car takes 45 minutes to charge. The battery management system deliberately slows the charging to prevent dendrites. Solid-state batteries don't have liquid electrolyte. They use a solid medium. This should theoretically eliminate the dendrite problem, but every company that tried it ran into the same wall. The dendrites kept forming anyway, until someone tried silver. I don't have access to the internal research. What I have is patent filings, trade publication interviews, and one very nervous procurement officer at a major automaker who told me, off the record, that their 2027 production timeline has been moved up to late 2025. Why the acceleration? Because whoever scales this technology first wins the entire EV market, and the Chinese know it. Here's where things get uncomfortable. In the last 14 months, this is confirmed from customs data, Chinese imports of silver have exceeded their domestic consumption by over 300 million ounces. 300 million ounces that entered the country and didn't come back out as finished goods. Where did it go? The official explanation is jewelry fabrication. The actual explanation, and this is where we move from confirmed to informed analysis, is strategic stockpiling. China has been building a silver reserve. Why would they do that if silver were just another industrial commodity? They wouldn't. They're doing it because their intelligence services have access to the same research papers that our government has. They know what's coming, and they're positioning to control the supply chain before the West realizes what's happening. This brings us to the third technology, the one nobody talks about, the one that explains why the Department of Defense is suddenly very interested in a metal they've ignored for decades. Hypersonic weapons. I'm going to be vague here because some of this information exists in a gray area. What I can tell you is this. Silver's thermal conductivity is the highest of any metal, higher than copper, higher than gold, higher than anything else on the periodic table. When you're building a weapon that travels at Mach 10, heat dissipation isn't an engineering challenge. It's the engineering challenge. The friction at those speeds generates temperatures that would melt conventional alloys. Silver-based composites don't melt, and every hypersonic missile, every scramjet engine, every next-generation aerospace platform requires them. This is confirmed. Defense procurement documents from 2023 reference silver requirements for classified programs at levels 10 times higher than historical averages. This is theory. Those programs are directly connected to the strategic reclassification. This is unknown. Exactly how much silver the Pentagon thinks they need. But I have a guess. And that guess is what led me to the coin dealer. Now, let me tell you why that classified document made me act instead of just worry. Page 14 contained a legal analysis. It wasn't policy. It wasn't a recommendation, it was a precedent review. Specifically, it analyzed the legal mechanism used in Executive Order 6102. For those who don't know, and this is confirmed history, not theory, Executive Order 6102 was signed by Franklin Roosevelt in April 1933. It required all persons to deliver their gold coins, gold bullion, and gold certificates to the Federal Reserve. The penalty for noncompliance was a $10,000 fine, equivalent to over $200,000 today and up to 10 years in prison. This wasn't a suggestion, it was a seizure. And for 41 years until 1974, it was illegal for American citizens to own monetary gold. The document I saw wasn't proposing a silver seizure. It was analyzing whether the legal framework still exists to execute one. The conclusion, and I'm quoting from memory here, stated that emergency powers under the Defense Production Act provide substantially similar authority to EO 6102, with the additional benefit of avoiding formal confiscation through mandatory purchase at administered prices. Do you understand what that means? They're not planning to take your silver, they're planning to force you to sell it at a price they determine, through a mechanism that looks voluntary but isn't. And the trigger language, the event that would justify invoking these powers, was described as acute industrial shortage affecting national security production. That shortage isn't hypothetical. It's already here. Let me give you the numbers. Global silver mine supply, approximately 830 million ounces per year. This number has been essentially flat for a decade. It's not going up. The easy deposits are gone. The ore grades are declining. New mines take 15 years to develop. There is no supply cavalry coming. Global silver demand, over 1.1 billion ounces per year, and growing. This is confirmed. The Silver Institute publishes these figures. We have been in a structural deficit for 4 consecutive years. Where does the difference come from? Inventories, the COMEX warehouse, the LBMA vaults, private stockpiles accumulated over decades. Those inventories are the buffer, the shock absorber, the thing that prevents the price from going vertical when demand spikes, and those inventories are draining. In January 2021, the COMEX registered silver inventory stood at roughly 150 million ounces. Today, confirmed, you can look this up yourself, it's under 30 million ounces, 120 million ounces gone in less than 4 years. At the current rate of decline, the COMEX runs empty before the end of 2026. But here's what the official data doesn't show. The ownership structure has changed. 20 years ago, the silver in those warehouses belonged to dozens of different entities, banks, dealers, investment funds. The ownership was dispersed. Today, and this is where confirmed data meets informed analysis, a significant portion of that remaining inventory is held by a handful of large industrial users who have no intention of selling. They're not storing silver for speculation, they're storing it for production. When someone asks to buy that silver, the answer isn't name your price. The answer is not available. This is the information asymmetry that's killing the retail investor. The spot price you see on your screen represents the price of paper silver, futures contracts, derivatives, promises to deliver metal that may or may not exist. The physical price, the price to actually acquire silver you can hold, is increasingly disconnected from the spot price. Go to any major dealer right now, try to buy 1,000 ounces of silver. Look at the premium they're charging over spot. 2 years ago, that premium was 3 to 5%. Today it's 15 to 20%, sometimes higher. The market is telling you something that the ticker isn't. The market is telling you that the paper price is a fiction, that real silver, metal you can touch, is already being rationed through price, and the government knows it. Which brings me to what I think is actually happening. This is analysis, not confirmed fact, but it explains everything I've seen. The reclassification of silver isn't about hoarding for future use. It's about controlling the narrative when the shortage becomes undeniable. Think about what happens if silver goes to $200 an ounce on the open market, $300, $500. Solar panels become uneconomical, the energy transition stalls, climate goals become impossible. Electric vehicles double in price, the auto industry collapses, unemployment spikes, defense contractors miss production deadlines, weapons programs get delayed, national security is compromised, the political fallout would be catastrophic. No administration, Republican or Democrat, can allow that to happen. So they won't. They'll intervene before the market forces the issue. They'll invoke emergency powers. They'll set an administered price that's high enough to sound generous but low enough to keep industry functioning. And they'll require that holders of physical silver sell to designated buyers at that administered price. The precedent exists. The legal framework exists. The political motivation exists. The only thing that doesn't exist yet is the trigger event. And that trigger is the inventory hitting zero. Based on current trajectories, that happens sometime between late 2025 and mid-2026. Based on the Samsung announcement, the new solar efficiency standards, and the defense procurement increases, it might happen sooner. This is why I drove 11 hours. This is why I paid premiums I would have laughed at 2 years ago. Because once the trigger is pulled, the option to buy at any price disappears. Now let me be clear about what I don't know. I don't know the exact timeline. The document I saw was dated September 2024. Policy documents get revised, timelines shift. What was projected for Q3 2025 might slip to Q1 2026, or it might accelerate to next month. Government planning is not precision engineering. I don't know the exact mechanism. The document referenced the Defense Production Act, but there are other legal pathways. The Trading with the Enemy Act, the International Emergency Economic Powers Act, executive authority under national security provisions. The specific tool matters less than the outcome. I don't know if they'll actually do it. Planning for something and executing it are different things. There might be enough pushback from Congress, enough resistance from the courts, enough public outcry to stop it. But I'll tell you what I do know. Every major government in history, when faced with a resource shortage that threatened national security, has intervened in the market. Every single one. Rome debased their currency. Britain rationed everything. America seized gold. The idea that our current government would simply let the free market determine who gets silver during a strategic shortage, while China stockpiles and the defense industrial base screams, is historically illiterate. They will act. The only question is when. And that uncertainty is what makes the current moment so critical. Let me explain what this means for different people. If you own paper silver, ETFs like SLV, futures contracts, mining shares, you own a claim on metal that may not be there when you need it. During a crisis, those claims get subordinated. The physical metal goes to priority users. You get cash. At a price you didn't choose. This is not speculation. This is exactly what happened to gold certificate holders in 1933. They got $20.67 per ounce. 1 year later, the government revalued gold to $35. They were made whole on paper. They were robbed in practice. If you own physical silver in a bank-safe deposit box, you own metal that's located inside an institution that can be compelled to comply with federal directives. Banks cooperated fully with EO 6102. There's no reason to believe they wouldn't cooperate with a silver equivalent. If you own physical silver in your home, you own metal that the government would need a warrant to seize. The 1933 order had enforcement provisions, but compliance was largely voluntary. Most people turned in their gold because they trusted the government and feared the penalties. Would people today be as compliant? Maybe, maybe not. But the enforcement mechanism exists, and the penalties they're discussing, according to my source, make the 1933 fines look like parking tickets. This is the calculation everyone needs to make for themselves. How much do you trust the current system to respect your property rights during a declared emergency? How much do you believe that administered prices will reflect fair value rather than political convenience? How much faith do you have that exemptions for small holders, and there will be exemptions, there always are, will actually protect you rather than being a fig leaf for selective enforcement? I've made my calculation. You need to make yours. Now let me tell you what's happening right now that most people don't see. The smart money is already moving. Central bank silver purchases have been accelerating since late 2023. This is confirmed data from the World Silver Survey. After decades of being net sellers, central banks are buying again. Industrial users are signing long-term supply contracts at prices well above the current spot. This is confirmed from earnings calls and SEC filings. They're locking in metal years in advance because they know the spot market won't be able to supply them. Sovereign wealth funds, particularly from the Gulf states, have been accumulating physical silver through private channels. This is harder to confirm because these purchases don't always show up in public data, but the refinery throughput numbers don't lie. Someone is taking delivery of massive quantities of metal that isn't appearing in exchange inventories. And here's the detail that should worry you most. The U.S. Mint has been intermittently suspending sales of silver eagles due to blank shortage. Think about that. The United States government, the same government that can print unlimited currency, that can command any resource it needs, that supposedly has first claim on domestic production, cannot source enough silver blanks to meet retail demand for coins. They're telling you the shortage is real. They're just not telling you what they plan to do about it. Let me share something that isn't in any document, something that happened 2 weeks ago that convinced me this is moving faster than anyone expects. I have a contact at a major precious metals refinery. We've known each other for 15 years. He's not a speculator or a conspiracy theorist. He's an operations guy. He cares about throughput and logistics and shipping schedules. 2 weeks ago, he called me at 11 at night. Something weird is happening, he said. His refinery had received an order for 5 million ounces of industrial-grade silver bars. Not unusual by itself, they process large orders all the time. What was unusual was the buyer, a procurement office he'd never heard of, government address, payment terms that were irregular, a shipping destination that didn't match any manufacturing facility in their database, and a confidentiality clause that prohibited him from discussing the order with anyone. He was calling me because he was worried, and because he'd seen similar orders at 2 other refineries he has contacts at, 3 facilities, combined orders of over 12 million ounces in a single 2-week period, all from the same mysterious procurement office. 12 million ounces is nearly half the remaining COMEX registered inventory. It represents roughly 40% of total monthly U.S. mine production. Someone is building a stockpile. Quietly. Urgently. At scale. My contact asked me what I thought was happening. I told him about the document. He was quiet for a long time. "How long do we have?" he finally asked. I told him I didn't know, but probably less than we think. The next day, he texted me. 4 words. Bought a monster box. He'd never owned silver in his life. Now let me address the skeptics directly. Some of you are thinking, this is just another silver pumper. They've been predicting shortages for years. The price always comes back down. You're right that silver has been volatile. You're right that previous shortage predictions haven't materialized into sustained price spikes. But here's what's different now. Previous shortages were demand-side stories, speculation, investment buying. The Hunt brothers trying to corner the market. When speculation drives price, the cure is more price. People sell, supply appears, the market rebalances. This shortage is supply side. The silver isn't there. No amount of price increase can create silver that doesn't exist. No amount of speculation can dig up ore grades that have already declined. No amount of market manipulation can accelerate mine development by a decade. The physics is the physics. And the physics says we need more silver than the planet can produce. Add to that the strategic reclassification, the government procurement, the Chinese stockpiling, the industrial users locking up supply. This isn't a market cycle, it's a structural break. The old playbook doesn't apply. Some of you are thinking, even if there's a shortage, the government won't actually seize silver. That's tinfoil hat territory. We have property rights, we have courts, we're not some banana republic. I wish you were right. I want you to understand that I'm not rooting for government intervention. I'm not excited about the possibility of seizure. I'm not gleefully predicting the collapse of property rights. I'm terrified. I spent my career inside the system. I believed in the system. I trusted that the rules would be followed, that the laws would be respected, that the government would behave rationally. What I learned, what that document showed me, is that when national security is invoked, the rules become suggestions. The laws become obstacles to be circumvented. The government does whatever it has decided to do, and the justification gets written afterward. They seized gold for 40 years. They interned American citizens during World War II. They surveilled the entire population without warrants for over a decade. Every single one of those actions was later determined to be legal by the courts that reviewed them. Because in an emergency, legal means whatever the government does. I'm not asking you to trust me. I'm asking you to consider what happens if I'm right. If I'm wrong, you own some silver that might go down in price. You lose some money. You feel foolish. If I'm right and you don't act, you lose access to one of the only assets that has preserved wealth across every civilization, every crisis, every collapse in human history. The asymmetry isn't even close. Let me tell you what I'm doing personally. I've converted approximately 40% of my liquid net worth into physical silver. Not paper, not mining stocks, not a silver ETF, metal in my possession. In a location that isn't inside a bank. This is not financial advice. I'm not a financial advisor. I'm a retired procurement analyst who read a document that scared him enough to completely restructure his savings. You need to make your own decision based on your own circumstances. But I'll tell you what I tell everyone who asks. The window is closing. The price you see today is an artifact of a paper market that's increasingly disconnected from physical reality. The premiums are already telling you that the spot price is a lie. The inventory drawdowns are already telling you that supply isn't keeping up with demand. And somewhere in Washington, in a building I've been to many times, there's a team of analysts gaming out the scenarios for what comes next. They have the same data I have. They have better data than I have. And they're not buying silver because they think it's a bad investment. Let me tell you about the last conversation I had with my source. This was 2 days ago. I called to verify a detail for this presentation. We talked for about an hour. At the end, I asked him the question I'd been afraid to ask. When does this become irreversible? When is the point of no return? He was quiet for a moment. We might have already passed it, he said. The public-facing inventory numbers, COMEX, LBMA, they're lagging indicators. They show what was true 6 weeks ago. By the time the number hits 0, the actual shortage has been going on for months. So what's the real number, I asked. What's the actual inventory situation right now? More silence. I can't tell you that, he finally said. What I can tell you is that the conversations I'm in have changed. 6 months ago, we were talking about managing the shortage. Now we're talking about triaging it. What does that mean? It means there isn't going to be enough for everyone. The question isn't how to increase supply. The question is who gets cut off. I asked who was at the top of the priority list. He laughed, but there was no humor in it. Who do you think? Defense gets first claim, then critical infrastructure, then strategic allies, then commercial industry, then investment. And retail? Retail isn't on the list. That's when I understood. The seizure, if it happens, won't be about taking silver from regular people. It'll be about ensuring that regular people can't compete for what's left. The administered price isn't punishment, it's exclusion. If you can only buy silver from approved dealers at approved prices for approved purposes, the government doesn't need to confiscate anything. They just need to control the market, and that's much easier to sell politically. We're not taking your silver. We're protecting you from speculators. We're ensuring fair access. We're stabilizing a critical market during a national emergency. Every authoritarian action in history has been packaged as protection. This one will be too. Here's my final message. I don't know if the document I saw represents current policy or contingency planning. I don't know if the timeline is 2025 or 2027 or never. What I know is that the conditions for intervention are forming. The legal framework exists. The strategic necessity exists. The political cover exists. What I know is that waiting for confirmation means waiting until it's too late. What I know is that every week the spot price stays suppressed while the physical premiums rise, more smart money moves into metal, while retail investors argue about whether the shortage is real. The shortage is real. The reclassification is real. The risk is real. What you do with that information is up to you. But don't say you weren't warned. Don't say nobody told you. Don't say, when the announcement comes, when the emergency is declared, when the administered price is set, that you didn't see this coming, you saw it right here, right now. The only question is whether you act on it. The banks want you to sell. They need your metal to cover positions they can't close. The government wants you to wait. They need time to position before the public realizes what's happening. The market wants you to believe the price is real, that paper and metal are the same thing. None of them are your friend. The periodic table is your friend. The laws of physics are your friend. The math that says demand exceeds supply by 250 million ounces per year, that's your friend. Everything else is narrative. I've made my choice. The metal is in my possession.